Peter Hugg, Global Trading Director for Kitco Metals, joins me now. Peter, you had mentioned that the Fed is likely to keep rate hikes to a minimum this year. With yields climbing organically, has your outlook changed now?
No, I still believe the Fed, if they go, probably will only go another couple of times this year, maybe only once. Again, I'm still watching that LIBOR rate, which is moving up to 2.8, and the 10-year yesterday went over 3. It seems the market is doing the work for the Fed. I'm not sure that they will, the prognosis out there is for 3 or 4 more this year. I just don't see it. I think the stock market is too vulnerable for that. And I'm not sure they want the dollar to rally to a great extent. So I think they're going to ease off a little and probably let this go through and maybe not even revisit it until September.
Peter, some analysts I spoke with earlier this week said that gold has missed its chance to rally here and that momentum is on the downside. How do you see it?
Not sure I would be in that camp. I mean, there have been some fundamental shifts from a sentiment perspective over the past few weeks with tensions easing with North Korea. Again, Iran's tensions are beginning to pick up again, but tensions are easing with North Korea. But this meeting hasn't taken place. They could be just bluffing to get Trump to the table. I find it amazing that they would be prepared to totally denuclearize their program. So again, I think a lot of that is up in the air, but it has taken some of the sentiment, the fear sentiment out of the market, which has been somewhat negative for gold. But I think that the driving factor which has pushed gold down are two things. One, again, we tried that 1355 resistance, 1355, 1360 resistance level. We failed there again for the 4th time. So fund buying and algo traders just started to sell the market. And they're selling the market into a scenario with rates going over 3%, and that just basically creates a situation that is fundamentally negative for gold because it moves assets into the US dollar. So that's sort of the scenario. But based on US rates at 3%, equity's still holding fairly well. Yep. I think gold at 1320 is showing amazing resilience. Any
thoughts on the silver front here, Pete?
I like silver. I mean, I know it's boring and and people are getting frustrated with it, but an 80-to-1 ratio against gold, if you want to protect yourself as a trader, you just basically short gold and go long silver on a ratio play. But if you just want to buy a metal from a value proposition, looking more medium to longer term, silver at 1650, I see moderate downside potential, maybe $1. But I think if this market eventually does take off again, I think silver will do what it's always done in the past, and that's outperform gold. And at an 80-to-1 ratio, if you are a medium to longer term investor liking the metals in that time frame, I'd much prefer to buy silver at 1650 than gold at 1320.
All right, Peter. And just a quick note for our viewers, those interested in meeting you can do so next week in New York City, where you will be taking part in a Jim Cramer event focused on investing and in diversifying your portfolio. Are you going to be bringing your A game, Pete, as you always do?
I'm going to try. I'm going to be there all day Saturday, May the 5th. So I'm looking forward to it. It should be an exciting venue.
All right. Well, I'll be there as well, Peter. Look forward to seeing you. And thank you.
You're welcome. Goodbye.
And thank you for watching. We'll be back tomorrow. Hey.